Good morning. It is 5:35 a.m. here on the West Coast, Monday, August 10th. And we're going to start this one off with a little bit of financial / political news because it's both. Furious Democrats are faced with a daunting question. Will they dare challenge Trump's stimulus orders? He's got him right in his trap. 3 weeks ago, when looking at the staggering amount of cash piled up at the U.S. Treasury thanks to a historic T-bill issuance spree over the past 3 months, we said that it's just a matter of time. We said it's just a matter of if, not when, Trump gives the green light to unleash a historic spending spree to put as much of this record $1.8 trillion in the hands of American people, and more importantly, voters ahead of the November 3rd election. Surely not indeed, and sure enough, with some $1.7 trillion in cash still held by the Treasury of the Fed, Trump did just as we expected, with Congress squabbling over the details and unable to bridge a $2 trillion gap between the HEALS and the HEROES Act. Gave himself permission to trigger the next fiscal stimulus in what now has appeared to be a never-ending series of helicopter money. Right, because if you pay attention to politics, a few weeks ago, John Roberts was the the swing vote in the Supreme Court, who decided that a president's executive order could not be undone by a next president, and it was on DACA. So he basically set a precedent that Trump's executive orders could not be challenged and could not be challenged by an incoming president like Biden. So they were not able to agree on a stimulus bill. As you know, the Republicans will generally make the stimulus bill about actual stimulus, and then the Democrats will try to put 6,000 pages of the Green New Deal in there as well. And instead of even thinking about signing it, he said, forget it, I'll just do an executive order. And you've probably heard, but we've got like a payroll tax cut, we've got student loan deferments. It's awesome. He basically just put the Democrats into a trap, because now if they fight him on this, they're going to be fighting directly against people making more money. Now comes the hard part, because with Trump having effectively trampled over any leverage that Democrats had to collapse the economy ahead of the elections by withholding money from tens of millions of unemployed workers, the president now faces a barrage of lawsuits from furious Democrats and liberal advocacy groups challenging the executive actions he issued on Saturday, providing economic relief measures that many of his fiercest critics actually support, including weekly federal unemployment payments, student loan relief, and efforts to protect tenants from eviction during the pandemic. As we reported last night, late on Saturday, Trump unveiled an executive order and series of proposals which plan an extension of the weekly federal unemployment payments that lapsed in July. Trump has proposed financing 400 weekly payments, down from 600 under the original legislation, by redirecting funds from the Federal Emergency Management Agency and calling on the states to cover some of the costs with money left over from the first relief package. As the result, with the stroke of a pen, literally, Trump wrested core powers away from Congress after weeks of discussions over a second pandemic rescue package stalled on Friday, putting Democrats in the highly unpopular position of being the party that withheld funding from the people. Yep. Democratic, in turn, claimed they were pushing for a much more expansive relief plan, even if they refused to release a small package of much-needed fund, and have called the orders of an insufficient stopgap that will become difficult to implement. Right, no one's believing that. As a result, unwilling to give up the fight and more than willing to put American financial stability in jeopardy, the president's directives are likely to get tied up in litigation over whether they violate core constitutional principles like the separation of powers. If he could actually help people, that would be great, said Lawrence Tribe, a constitutional law professor at Harvard University. But the Constitution isn't a magic wand for the president. Anything as sweeping as what he's promising is just pie in the sky. We'll see. To critics, Trump's success in nullifying the influence of the two bickering parties looks illegal and run around Congress, which has been spending money under the Constitution. House Democrats sued to prevent a similar effort by the White House to finance the construction of a wall on the Mexican border using funds redirected from the Defense Department, although the Supreme Court last week declined to halt the construction of the wall. He's basically saying he doesn't need to rely on Congress's power of the purse. He can simply spend money, and he can spend it on whatever he wants, Tribe said. And that's simply not the law, even though millions of Americans and countless Democrats will surely side with the man who just greenlighted $400 weekly into their bank accounts. Yep. Good luck, Democrats. You're going to look real good trying to sue on this. As Bloomberg put it, a key question is who will sue? While they have criticized the orders as insufficient and impractical, congressional Democrats may view it as politically risky to block payments to Americans in distress. Yeah, if they're smart. It puts the administration in a different position than what they've been used to, said Keith Whittington, an expert on politics and law at Princeton. It's smart politics. But states that plan to use pandemic relief funds for purposes other than employment payments might refuse to comply with Trump's directive, potentially setting up a legal battle. The president seemed to acknowledge that possibly when he announced the orders on Saturday. I guess maybe they'll bring legal actions, but they won't win, he told reporters. I think this will go very rapidly through the courts. One group that will surely sue the administration are landlords, as one of the orders Trump issued appears to give federal housing officials broad discretion to prevent evictions. Every legal aid lawyer in the country faced with a destitute client being evicted will slap this executive order on the judge's table and say there should not be any eviction, said Charles Teifer, a law professor at the University of Baltimore, and their landlords who have federally insured mortgages will argue back that it would be illegal for evictions to be halted. In a third order, the president said he would defer payroll tax payments from September through December for people making less than $100K a year, a proposal that has met bipartisan opposition in Congress because it could endanger funding for Social Security and Medicare. The order also said the Treasury Department would explore avenues to eliminate the obligation to pay the tax altogether. That directive may well draw legal challenges. The argument behind the payroll tax seems very aggressive, said Whittington. The breadth of the order clearly exceeds what Congress anticipated in giving the Treasury some discretion to delay tax deadlines in disaster areas. Trump may have better luck defending the fourth of his executive actions, namely student loan relief. Existing federal statutes allow the Secretary of Education to temporarily delay loan repayments during periods of economic hardship. It's unlikely that perennial opponents of Trump, like liberal advocacy groups, congressional Democrats, and Democrat state attorneys general, would want to block that measure, and they may not even have the legal standing to sue. It is not clear who would be well situated to challenge the administration's actions. Yes, he's really got them in a trap. Best of luck to the Democrats here. Just kidding. In other news, the C-19 pandemic economy has had it with you. The global economy hasn't got time for the pain. Despite second waves in Australia, Japan, and Spain, and I guess the U.S., all countries that were deemed success stories and out of the woods, and some U.S. states like Rhode Island rolling back up plans to open up, the global economy, the global recovery narrative is alive and well on Wall Street. Take that, panic sellers. Before anyone thinks that the pandemic is over and the economy is going to return to pre-COVID levels, it bears keeping in mind that the economy is only recovering from being nearly completely shut down. Think of it as a dimmer switch. Once turned off, it's now at the lowest brightness possible without flickering off. That's kind of where most of the developed markets sit. Within emerging markets, only China is growing into positive GDP territory. Lovely. Last week's economics data showed the global economy is on a path to recovery. Although re-accelerating C-19 cases are fueling fears of second waves in the epicenter states, their economic consequences would likely be more muted as the appetite for lockdowns again is weak. Very weak. Over the weekend, we learned that President Trump will not wait for Congress to decide on some aspects of the C-19 relief bill. Passed since the spring, he will extend the federal government's unemployment insurance, but it will cut it from $600 to $400 a week. Many companies, from services to assembly lines, have said they cannot get workers to come back to the shop floor because they're making more on unemployment. Yeah, let me just stop there. That's actually super true. I have friends who are unemployed now, and they have no incentive to go back to work. They're making way too much money chilling on unemployment. And good for them. But, yeah, there is no incentive to work, folks. Depending on what kind of job you have. Meanwhile, the central banks and advanced economies continue to be supportive of both stocks and bonds. Many people hate this as it distorts price discovery, among other things. But the Fed has seen what happens when retired persons lose 40% of their retirement portfolio due to economic crises. Unless they are buying those same assets back on the lows, which most are not doing because they are not working and likely not investing, they have to wait years for those prices to recover. The Fed's move in the market may be beneficial to big investment houses, but it is also beneficial to retirees who are guaranteed a backstop to major market corrections that destroy their retirement accounts. Economic data looks okay. Mm-hmm. Wall Street hopes this week is as good as last week when it comes to recovery news. Last week's better than expected U.S. job claims and non-farm payroll figures gave everyone a reason to stay bullish. But the risk of new layoffs is plausible, especially in states that have either added restrictions to businesses, like New Jersey and Rhode Island, or finding out that mandatory mask use is a buzzkill, keeping people away from traditional activities. I mean, it totally is. I won't wear a mask outside. Like, I'm telling you right now, I will not. I am going to be breathing in fresh air when I go out on a morning walk, when I go out into the forest, when I go out into the mountains. I am not going to wear a mask anywhere except the grocery store, and that's because the grocery store sets those rules. I am not going to be that guy that like causes a scene or gets refused service to buy food for my family, but that's it. Everything else is mask off. I honestly don't understand. I literally see people in their cars by themselves with nobody else driving around with their windows up wearing a mask. I mean, do these people realize they're getting less oxygen and breathing in their own CO2? This is ridiculous. Some people are really bought into the fear of this C19. Anyway, let's go to some crypto news and we'll wrap it up there. As Ethereum DeFi craze continues, Uniswap is processing over 100,000 transactions a day. So this whole DeFi thing, like I still don't really know much about it. I guess some of the coins that we hold or that you might hold are DeFi. I guess that's the hot word for crypto this year. But let's read. In 2018 and 2019, decentralized exchanges on Ethereum were barely used. While hailed as the future, these platforms failed to garner much support from cryptocurrency traders who then preferred the cost and time efficiency of centralized platforms. And let me tell you, absolutely, I don't remember what it was called, but I actually did use a DEX, an Ethereum DEX. It was the most painful process I had ever gone through, and I ended up losing like $50 worth of Ethereum because transactions took so freaking long on it that I just like gave up, and I'm pretty sure there's still like $50 of Ethereum somewhere on some address on some decentralized exchange. I hated it. It was the worst experience ever. All hail Binance. I will use Binance. I'll even use Coinbase anytime over any of those until they become almost irrecognizable from actual centralized exchange. I prefer the speed and efficiency of a centralized exchange. Over the past few months, however, as decentralized finance, DeFi, has gone parabolic, DEXs have become a popular product. So popular that Uniswap, the most popular Ethereum-based trading platform, has reported that it processes in excess of 100K transactions a day. Okay, cool. Uniswap alone processes 35% of Bitcoin's daily transaction account. That's amazing. In recent weeks, many traders have abandoned the tried and true strategy of leverage trading cryptocurrencies. For Uniswap, the exchange, after all, is where many DeFi tokens are first listed, meaning Uniswap is often the only major source of liquidity for many new Ethereum-based projects. This has meant that as DeFi has undergone a Cambrian explosion in recent weeks, Uniswap has been the place to be for many traders seeking potential parabolic gains. Hayden Adams, the founder of Uniswap, indicated on August 9th that Uniswap has seen such interest that it now processes over 100,000 transactions every day. This amounts to around 1.2 transactions every second. For context, Bitcoin processes around 325,000 transactions a day at around 3.6 transactions per second. Wow. Okay. With these 100,000 transactions a day, Uniswap is processing upwards of $100 million worth of volume per day. Coinbase Pro, on the other hand, does around $500 million worth of volume every day. There may be room for Uniswap to grow despite already accounting for a large percentage of the gas consumed by Ethereum network each day. As reported by CryptoSleep previously, Curve, a stablecoin-focused decentralized exchange, is set to soon release a governance token called CRV. Details about the cryptocurrency are sparse as it has not yet launched. Spencer Noon, head of DTC Capital, though, has said that the coin could have implications for all of Ethereum and DeFi. Cat's out of the bag. This is correct. CRV is likely the next big domino to fall that puts DeFi back in a frenzy. That's what happens when your critical infrastructure for farms have huge daily volumes plus a lean cap table. Watch second order effects of this launch closely. Funding secured. Uniswap's parabolic uptick in adoption comes as the company finished an $11 million funding round. As indicated in a recent Form D submission to the U.S. Securities and Exchange Commission, the team behind Uniswap raised that sum in Series A funding. The round was led by Andreessen Horowitz, so that's a major Silicon Valley venture capital firm. If you've never heard of it, it's one of the biggest ones. Like all the, I don't know, half of the startups that you've heard of are generally always funded by a company like A16Z, as they call themselves. And yeah, other investors like USV, Paradigm, Parify Capital, and other firms chipping in. The Uniswap team will be using these funds to hire more developers and team members, allowing Uniswap v3 to be built out. This version of Ethereum decentralized exchange is expected to dramatically increase the flexibility and capital efficiency of the protocol. Yeah, so I'm still not really like super crazy about DeFi because I don't know what's going on. But I guess Ethereum is a DeFi coin and I own it, so cool. Yay for me. Let's check out some prices. Refresh. Bitcoin is approaching $12,000 again. Ethereum still holding well in the 390s. XRP still holding decently at the 29-cent level. Definitely should talk about Chainlink. This coin pumped about 30% in the last 2 or 3 days. Now, I have none of it. I don't own any of it, and I'm wondering if I really missed out because I always knew it was sponsored and created by Oracle, which is a tech company, a very old one. They're like a dinosaur. So it's an Oracle-based platform, but I mean, I'm pretty sure this coin was just mere pennies a year ago. So kind of missed out on that. Yeah, let's take a look. January 20, it was $1.88. Jan 19, so a year and a half ago, it was 30 cents, and now it is $13. Wow. So congratulations to the Chainlink holders. That's pretty big. It pumped really hard over the weekend. Cardano still sitting at 14 cents. Kind of surprised about that. And VeChain still over 2 cents now, guys. VeChain is looking strong. Tron is back in business at over 2 cents. Tezos, almost $4. One of the original proof of stake coins. Still looking good for a really big parabolic bull run this year. Gold markets are open, and we are still trading above 2000s, but man, the price of silver is where it's at. This has gone up about $7 in the last 2 weeks. Still not too late to get on the silver train or the gold train if you have the means, but I mean, silver is obviously much more easier to get into based on that price. You can get a stack of silver eagles for like $500, $600, $700, something like that if you do the math. Highly recommended. Don't know where the dollar's going, but it doesn't look good. And I think that's a long enough update for Monday the 10th. Everyone have a great day. See you tomorrow.